Hi, I'm Linda van Tilburg for Biznews, and with me today is Andre Cilliers, currency expert at TreasuryOne. Well, Andre, it seems the rand is buoyed. There's a positive mood with Moody's saying the outlook for the country is now stable from negative. So what's going on and what's the reason behind all this?
Yes, no, good afternoon, Linda. It's an interesting one. 2 weeks ago when I spoke to Alec Hogg, we discussed it and he called me suddenly a rand bull because I said that the rand could go to 14.5 and we reached that. And we're still not very far off from that. Moody's, what did they say? Yes, we changed to stable, but if you go back to our budget reading when Mr. Godongwana did that, we would recall that he's had a very nice windfall on tax revenue. If we just listen to what the receiver also released here at the end of March now, the figures for collection for the fiscal year, then very excellent levels. So when you look at tax income and you look at the statistics that the minister gave us, then we looked better in terms of our deficit as a percentage of GDP. We looked better as our percentage of loans as a percentage of GDP. And Mr. Godongwana had stayed and steered the way of fiscal discipline. He remained on that path that has been laid down by Mr. Mboweni. Now, with those better statistics, yes, it's on the back of an economy that was rebalanced and the growth figures came out and the size of the economy was increased. But all of that makes for good reading, and that says that we are actually in a stable environment. So yes, I would concur with Moody's outlook completely. We're not up there where we can say that it's a positive outlook. And so we need to now move to the positive outlook so that we can eventually move back and get ourselves closer to investment grade. But I think at least with what was said, we're on the right path, and that helps.
So how did that help the currency, the rand?
Well, that really didn't do too much to the currency. What we have seen last week with the employment figures that came out and the movement of the dollar, really, and also on the back of what happens with the talks between Russia and the Ukraine, there was a slight optimism about that. We must not forget that that's still very much at the forefront and very important. You know, we have short-term memories and we tend to, when something drags out for 6 weeks, then we tend to forget what's the impact of that. But that impact is still there. But we have seen an oil price coming down slightly. We have seen that there is talks heading slightly in better directions. And all of that led to a euro that did a little bit better and the dollar that did a little bit weaker. And that, of course, it also aided the rand in remaining at the strong levels where it is currently. Now, this morning, we are seeing that the dollar are regaining some of that strength with minimal impact on the rand at this stage.
Well, if we look at the euro, I see Putin wants to be paid in rubles. So for his gas and oil, how is that impacting the euro at this stage?
Well, that's slightly negative for the euro, and hence we are, as I said, seeing the dollar regaining some of that lost ground. We had seen that the euro traded above the 111 last week at one stage. It's back down very close to the 110 level. So yes, that's negative, but we must remember that the dependency of Europe on Russian oil is very big. Russian oil and gas is extremely important for Europe, and if that creates a problem in any way, then Europe will be the sufferer, their currency will be the sufferer. And hence why I said that we have to continue looking very, very closely about what happens with the Russian and Ukraine talks and how this war is going to play out and how long it will drag out. Paying for your gas and your oil in rubles is a problem. We know that there's sanctions. We know that The ruble is not the most traded currency in the world at the moment. It is the sort of underdog throughout the world. But yes, that's quite a move from Mr. Putin to say, pay me in rubles and then you can have my oil. So he's just sort of reversing or trying to reverse some of the impact of the sanctions on his own economy and throwing the ball into the court of the European nations. Now, we have seen that Mr. Biden said that they will release some of their strategic reserves. We have also seen that OPEC said that they will increase their production for the month of May. So that should come some way in alleviating the shortages, but you're still very dependent on what happens in Russia. They are a major player in the oil market. But since then, we have seen that the oil prices had come down a little bit, and we've seen the positive side of that, trading closer to the 100 level. So that's a positive, but still a problem for Europe.
But commodity prices are still rising. What impact does that have on the currency?
Well, commodity prices remain slightly elevated. It's a heck of a lot lower than what it was at the start of the war, but also that plays part of the game there is the whole COVID situation in China. We must remember that with a lot of lockdowns there and harbors being closed, and the impact of that on the world economy and expected growth in the world economy, that would be expected to be lower because of that. That the demand for commodities would be a little bit lower, and the delivery of that would get into some bottlenecks, and that played a bit of an impact, had a bit of an impact on the prices of commodities. But they remain slightly elevated, and as we come out of these situations and world markets normalize again, we should see most probably a slightly further incline in commodity prices, especially on your precious metals, more so.
So if we're looking forward, what do you think is the outlook for the rand further along in the year?
Well, I think that for the very, very short term, that the rand is now firmly entrenched in a 14.5, 14.80 trading point. We should not forget that 2 weeks ago when I said if we break the 14.80, we could go down to 14.5 very, very quickly. Exactly that happened, and now we're in that trading range. So it needs to break out on either side to reach new levels. Now, I think on both ends, with what's happening in the short term, it would find it difficult to break out of either of those two sides, and it would remain there for the short term. If you look slightly more to the medium term, and now I'm speaking 2 to 3 months and up to the 6-month area, I would think that the rand has strengthened a heck of a lot already from where it was. I do think that it do influence our trade figures quite aggressively, and it is slightly negative at these strong levels for exporters because they're not doing as well as they should, and that could, in terms of our trade terms, sort of, as I say, have an impact on that. So I would expect, if you look at that medium term, that we would break out at the 14.80 level side and move back into a 14.80 to 15.30 level. But that is, as I say, not short term, that's more to the medium term, 2, 3 to 4, 5 months that would happen.
Well, one thing we've seen to not be able to escape is increasing interest rates. So that's going to keep on increasing throughout the year, it seems.
Yes, Mr. Netanyahu had warned and said, that a next round of interest rate increases might very well be 50 basis points. Now, let's not forget, we hadn't mentioned that, but we've spoken before a lot about the inflation situation throughout the world, especially in the US, where it's extremely high. Not as bad in South Africa as yet, but let's not forget that petrol prices will be increased again. We did get some assistance there from government that reduces on a temporary basis some of the levies that have taken on fuel. So that helps, and that will help the inflation. But inflation's still looking on the elevated side because of these increased logistical costs, and that should most probably continue for some time. Once again, watch out the space between Russia and the Ukraine, oil price playing a major role here. But if it remains that way, then we are most probably set for another 50 to 75 basis points of interest rate increases during the course of this year, which could have a negative impact on our economic growth and the spending patterns of consumers, because that will take a lot of money out of their pockets.
Well, it seems we keep on going back to, Ukraine and Russia. That seems to be impacting everything, energy prices. What about the fact that the 6.5 billion rand worth of private power generation, it seems to have been delayed again? What impact would that have?
Whether that will have a major impact on the level of the currency and where the currency is trading, I think the impact there is more on sustainable growth that we so desperately need in South Africa to bring down our unemployment figures, etc. So I think the impact there is more on that because that brings the sustainability of the supply of electricity that's so muchly needed in South Africa into contention. But what also brings our economic growth into contention is, and I've just read over the weekend, how several billions of rand was returned to Treasury by the Northwest Province, which seems to be a situation from all the provinces. Now that, when you look at what our president tells you and what everybody speaks about in terms of economic growth and job creation and so forth, if you don't even spend your money, that is there to be spent, money that can be spent on infrastructure projects, the fixing of roads, potholes, renewable energy, you name it. I mean, there's money to be spent on it, but it's not being used. Now, if you don't even use that, how will you use new money that comes into the situation? And that's money that, if you spend it, creates positions, much needed positions that people get money, that money gets spent in the economy, the government gets their spin-off on VAT collection from that, but much needed economic growth. So all these things into the pot. We need to get this economy going and spend our money wisely and not sit back on our backsides.
So is there any data or announcements coming out that would affect how the outlook of the rand or the rest of the year would look like?
Well, we're in the beginning of the month, so there's not so much data this week or the week thereafter. The most important data really comes out a little bit later, but the spaces to watch is any words being spoken by any Federal Reserve members in terms of what can be expected of interest rate increases there. They've also warned that the next one could be 50 basis points. So I think that's the space to watch. And then, as I say, those technical levels of a trading range between 14.5 and 14.80 is the ones to really watch carefully at this point in time.
So it seems what you're saying is, when something goes wrong in Europe, or there's a war in Europe, or we might think we're sitting far away from it, and South Africa might actually benefit by it. It doesn't really. We're always impacted by these huge events in the world.
It's a global economy, and we're part of that global economy, and we're interwoved and interlinked with everything that happens internationally. We're not a little bubble on the side here at the southern tip of Africa. There's a lot of people think that we are, but we're not. And so, if something happens anywhere in the world, somebody sneezes, we will get a cold. And the impact of what happens in the world, with us being one of the smaller economies in the world, we're interlinked, we're interwoved with them, but we are one of the smaller ones. So if one of the big ones gets a bit of a sneeze, then we get a fever and a cold. So it will always impact on us. We cannot live in isolation.